Okay, folks, welcome back. Welcome to FX Beethoven Forex Argo Decode. My name is JD. Before I talk about USD JPY, I want to talk about interest rate because this is a powerful tool you have to use when you are trading the market so that you have an idea of where institutions are investing their money. So if you want to understand interest rate, understand that return on investment, if I can say. If you already use banks, you understand what I mean by interest rate. A currency with a high interest rate is favorable to investors. Investors would like to invest in their money in a currency that will give them a return on investment. Hope you understand why this is very powerful. And this will show you guys the true direction or longer term direction of the pair you are trading. So make sure you visit this website, globalates.com. You can see here, or you can even type, if you are not able to copy this, you can simply type globalates.com. It will open the home page like this. Once you see this home page, make sure you click here in this section that says central banks, and then you click on more information on central banks. And once you reach here, you will see this table here. So this table will be showing you currencies with and central banks and the interest rate they have set to their currencies. So, for example, if I say American interest rate, Fed, when you say Fed, you understand Federal Fund Rates or Federal Reserve, if I say. So, when you simply mean Central Bank of United States, I think it's Federal Reserve, right? United States. You see, interest rate is 5.25 percent. This is the interest rate. Previous interest rate was 5%, but this time it's 5.250. And see it has increased. This is why you see, or it is bullish, if I can say. USD is bullish. As you can see, you have an arrow that shows you that it's going up, right? Direction here. In this direction, as you can see, it is showing you that it is going higher. So you can see Australian interest rate, that is AUD, Australian dollar. You see 0.850%. Previous rate was 3.6, meaning they have added around 2.5. So it is increasing, right? So when we are going to find a pair to trade, you need to compare what? You need to compare a weakest currency against a strongest currency. So what I mean, you look at this this table, you try to see where you find the highest interest rate, and you can write that down, and then you find a currency with a lowest interest rate. So once you compare that, you immediately know the long-term trend direction. Hope you get an idea of what I'm teaching you. Remember again the concept of base currency and the quarter currency. Every chart you see here, for example, USD JPY, the chart you see here on this level is showing you, is following US dollar, because USD is the base currency, right? If the chart is dropping here, this shows you that the US dollar is dropping and the JPY is strong. For example, here on this move. In this move, Japanese yen was bullish and the US dollar was bearish. Meaning, as long as a quarter currency is bullish, a trend is going to go down because, a chart is going to go down because a chart will be showing you how the performance of what? The performance of the base currency against quarter currency. So, in this case, base currency is US dollar. So if Japanese yen is strong, US dollar is weak. If US dollar is weak, the chart must go down because the chart is following the base currency and the US dollar is the base currency in this pair. Hope you understand this, and this will help you know the direction of the pair you are going to trade. So here, if you click here on the current rate, like this, see what happens when I click there. If I click there, it will show you, it will start from the weakest currency or the weakest rate all the way to the highest rate. Do not trade all of these Brazilian currency. No, just choose strong pairs you already know: GBP, Euro, CAD, AUD. Do not trade the Chinese yen. Do not trade that. Right? So you understand what I mean. So here, overall, the weakest currency we have is Japanese yen. This is the weakest currency we have because the Japanese interest rate is minus 0.1 or 0.100, minus 0.100, meaning this is the weakest currency in our chart, meaning USD is going to be bearish in front of all of other currencies. Hope you understand. So if you look at, for example, American interest rate, you will see that it is 5.25%, meaning if you take this pair, so this currency with the highest rate, and you compare it against this Japanese yen, you are going to have what? You are going to have a trend. You are going to have a trend direction because here US dollar is very strong in front of Japanese yen, meaning this chart, overall, this chart is bullish. Whatever you see here, let's go to monthly time frame. Whatever you see here on this area, this chart will end up being bullish. Hope you understand. This chart will end up being bullish. So you can see you've got a breakout structure here. As you can see, this is a breakout structure, but I'm not going to trust this breakout structure. Right? Because interest rate is very high and JPY is a weakest currency. This move is likely to continue to go higher. Hope you understand. It's likely to continue to go higher. And this can be a little consolidation for a quick rally to the upside. Hope you understand why you need to start from here. To give you an idea of where the banks are or smart money is investing money. Hope you understand what I mean. For example, if you go back in history, if you go back in history and try, for example, to study, let's say, if you go back into the history and you try to study, for example, this area I've been marking here, in this area, you see Japanese yen was breaking the structure. That even if it was breaking the structure, if you go to interest rate in this time, you may end up seeing that Japanese yen interest rate was very, very low and the USD interest rate was very high, the dollar. So this breakout structure was a fake. This was inducement, right? So market must continue to go higher. So this is why I'm telling you, I can never ever trust this breakout structure as a real breakout structure. You understand? Because interest rate on the Japanese yen is very, very low. There is no reason for market to create a downtrend, because if a downtrend is formed here, if the market creates a pullback and then creates a downtrend, that will mean Japanese yen is very strong. Because every time a quote the currency is strong, the chart must go down. Alright? By this time, the currency is very strong, so I'm thinking that we continue to go higher. If you are thinking this as a breakout structure, pay attention. This is a possible accumulation for me to create a strong uptrend. Remember, if you go back, interest rate was 0 here on Japanese yen. As you can see, interest rate was 0 on Japanese yen. Now here interest rate is minus 0.100, meaning it's even lower. It's even lower than the previous. Remember, here we have 0, here we have minus 0. So this is the lowest interest rate compared to this one. Meaning Japanese yen continues to be a weak currency. Continues to be a weak currency. So if you are trading, for example, Euro JPY, GBP JPY, all those currencies will continue to beat Japanese yen. If you are trading anything with Japanese yen. Hope you understand why this is very, very powerful. So back to analysis. It's very simple. You know you've got what? You know you've got a bearish range. You've got what? You've got a bearish range. And then this is the high. This is the low. So you understand why a range can be violated. Right? A range is simply a tool to track what we used to see how institutions are behaving, but we do what? We go to look at fundamental analysis to try to understand what is going on. So after that interest rate, after this interest rate, so we have what? We have a breakout structure. Let's think here. In this area, remember Japanese yen remains the weakest currency. We've got a breakout structure, then the market is trading back in this area in a discount zone below 50% of your range, trading on your optimal trade entry right here. Okay, let me leave it there. So it's trading on your zone right here. As you can see, Japanese yen is rejecting the zone. So after rejecting the zone, we have what? We have a structure going on. You have a high, market creates a pullback within your bullish range. Then market trades higher, breaking the structure in this level. Then trade lower, goes higher, breaking the structure, breaking a structure on this area. Is breaking a structure on this area, and then you have what? You have a pullback going on. This is a pullback within your bullish range. Within your bullish range. Simply understand what I'm doing here. Within your bullish range. Oh my God. You know. Within this bullish range. Within this bullish range. So we're not marking anything. I don't know. Don't know why it's not working. So we have a high, a low, a high, if I can say. So this is the structure market is using. Do not care whether market respect this level. As long as we don't break this level, we are still bullish internally. Right? This can be used to trap people, to make them believe we are going down. You understand? Even if you understand every pullback, every break deserves a pullback here, we are supposed to see market dropping down here. But as long as we know that can happen, I mean, after this return to break or structure, we needed a pullback to come back here, so that market can easily drop back here in this level. Right here. Down. We understand that. But what we need here, even if this is happening, we need to focus on this structure market is using. After this break or structure, if market give us a reaction here to go higher, we join the move, because this is a bullish range. This is your bullish range. Then all we have to do is to go to, for example, H4 time frame and try to see the details. Have you seen anything? Market was trading all the way down, but once it reached this level, it reacted and broke the structure. This is a break of structure. This is a break of structure. With this break of structure, we have a range starting from the low all the way to the high. From this low all the way to this high. Remember, it doesn't mean the range is gonna be over here, because this is the end of the week, because we still have a zone that can easily trade on this manipulation zone, and then start creating what? Start creating a pullback before it creates a new high. Before creating what? Before creating a new high. Hope you understand. So once you've got your retreat range, all you have to do is to go to another time frame, like another pair, another broker like FXCM, and then you mark the chart from there. FXCM or Forex.com. Let's see. USD, JPY, Forex.com. First the concept, same fee. Okay. Now you've got a breakout structure in this area. See your breakout structure. This is your breakout structure. And then you've got a bullish range. You need a cycle 1, cycle 2, cycle 3 of your impulsive move, meaning you're probably missing the last cycle of this impulsive move before you get what? Before you get a pullback, right? Even, for example, before we get a pullback, we might need to trade. You may need to trade in this area. When I mean you need to trade this area, I mean the chart needs to reach somewhere here before you get what? The certain pullback. Go to 1 hour time frame to see what? To see the details. If you can see, right? This is a corrective move, a cycle, 2 cycle of corrective move, or ABC corrective move. As you can see here, for those who have an idea about, for example, Elliott wave, ABC corrective move, this is the cycle of a pullback. Same thing here. So we need to see price trading somewhere here, and then we need to see price trading back somewhere here before you get what? Before you get, for example, a pullback to continue to go higher. Hope you understand what I mean. So this is the floor. This is your range. Allow market to reach anywhere, but at any time you will see to come back, to use this zone or this zone to continue to go higher. And you target, for example, again this high. If it gives you something different, for example, dropping down, that's okay. It will flow. You understand why it displayed this zone. But we have seen JPY is the weakest currency. This is probably accumulation. They are compressing price here so that they can create a sharp buy to the upside. A sharp buy to the upside, and then it can become what? Can become a long-term trend. Hope you get an idea of what I'm talking about. So this is your range. This is your current range. You've got to break or ultra. You are in the zone. This is your future buy signal I'm giving you. If price is coming back here, but trade at your own risk. Trade at your own risk. So hope you understand what I mean. My purpose was not to show you the whole order flow on this pair, because we've talked much about order flow, and I think everyone can go and do it on him or herself. My purpose was to show you the power of global interest rate and why you need to use them in all of your pairs you are trading, comparing the weakest currency to the strongest currency, and then you have got a trend direction. Until next time, guys, good luck and good trading. But remember to subscribe, remember to share the video, remember to leave your comment here, remember to join our Telegram channel. Thank you so much. Until next time, good luck and good trading.